Hello and welcome to this video where we're talking about how spread betting works, presented by spreadbettingportal.com. So what is spread betting? Well, first of all, don't forget, technically it's still trading. Trading is trading whether it's in spread bets or whether it's within the real market. The skills needed to trade spread bet are the same skills, the same tools, the same information that professional traders use day in, day out. What's more, spread bets can be opened in almost identical markets: the index, commodities, forex, options, so much more. Now, spread bets even use the same live financial data presented in the identical way to which professional traders use to make their analysis. These tools, thankfully, are provided predominantly by your spread betting company provider. They provide you with a portal which looks very much like this. This is from IG Index. But they all follow a very sort of similar layout. I must point out that IG's is very good. They've recently updated it, and it is rather exceptional. But they all follow a very similar pattern, where you have on the left we have a search option where you can look for the different markets, equities, and variations of. You can pretty much spread bet on virtually anything within the financial markets and beyond. And then we have your watch lists, where you can put together groups of potential trades or charts that you're looking at. And then, of course, we have the charting tool at the bottom, which over the years has become more and more based on professional level charting tools. A few years ago, even quite recently, they left quite a lot to be desired, whereas now we are starting to see a real turnaround in the level of charting ability a lot of these portals, the spread betting companies provide. I would still recommend later that you buy a professional charting package that's separate from that provided by your spread betting provider, simply because there are limitations still, just simply because they're internet based, and simply because the spread betting companies really don't have the tools completely there. They're kind of still based on being quite not amateurish. I wouldn't say amateurish, but when you use a professional charting package and you see what that has to offer and the ease of use of that compared to, say, the ease of use of in terms of analysis of one provided by your spread betting company, there is quite a difference between the two. More so when it comes to looking for opportunities. A professional charting package will provide you with lots of tools and is an awful lot quicker and easier to find opportunities to trade, which is part of what you need from a charting package. Whereas trying to find opportunities with one that's provided by your spread betting company can be a little bit cumbersome still. But having said that, they are, in terms of charting ability and the tools that they provide, they have come an awful long way and are very good now. So a typical trading portal will allow you access to the markets that you want to trade. They will provide you with some ability of charting. Some are better than others. They will provide you instant access to your accounts, so you can see how well you're doing, your open trades, your trade history, and so on. Obviously allow you to place a a trade quickly and easily, this is obviously quite important. Over the years, I've used many trading portals and tools and what have you. It's amazing to see how complex some brokers and some spread betting companies over the years have actually made it quite difficult to place a trade, when that really should be the easiest thing to do, because you want to do it once you've made your decision to trade. You should be able to action that trade very quickly. Thankfully that's improved, but some are still a bit cumbersome. So it's always a good idea to have a look at those. You can usually see how well they work in a demo account. And then of course we have a means of creating portfolios and more. So those are the things that you should look for from a spread betting company in terms of the tools that they provide to you for free. So what are spread bets? Well, they are based on futures contracts. They kind of use a lot of the terminology that futures contracts use. And as a result of that, you can trade up, bullish, long, or down. When the market's going down, you can trade bearish or short. Now, one of the key things with spread bets is that there is no value. You're not buying anything. All you're doing is taking a bet against your spread betting company where you have an account, much like you would with a bookmaker. So all you're really doing is betting on the movement of a financial instrument, and the more you are right in one direction, the more you will profit, and the more you are wrong, sadly, the more that you will lose. Now there is protection to protect you against any sort of nasty surprises that could crop up, and that is where you use what is called a stop loss. It's very simple to understand. A stop loss is basically a price level that you set when you open the trade that will automatically close the trade if hit. So for instance, say if you were opening a trade and you would put and you were going long, you would put a stop just, sort of quite a few points, but not too many, below the point that you opened it. So if the market did go down, you were protected against any excessive losses. And of course, these can be used to your advantage as well. These can be adjusted up or down to move up with the profit of the trade. And this is where we call it locking in profit. So say if the trade you were making was going bullish and was trending really well, going up, you can lock in profits by moving up your stop with that trend, for instance, to lock in any profits. So you need not you need not have to be sort of sitting by your computer all the time waiting to close the trade. The stop will do that for you. Now there are various types of spread bet. We have rolling daily trades, which are sometimes called daily funded bets. And now these are a trade that are left open. They just continually roll over from day to day. And they're only closed either obviously by you or when your stop loss is hit. Now the benefits from this is that they do have quite tight spreads compared to quarterly trades, which we'll talk about in a moment. They would only be really ideal if you're using them for shorter term trades, because there is a cost in terms of having the trade continually roll over every day. And basically there's an interest payment which is deducted at the time of closure, and this interest payment is a charge for each night that it goes over, that you go over to a new trade. There's another interest payment and so on, and these are combined into one charge, which are taken from any profit or loss when you close the trade. So they really are best, say, for sort of techniques such as swing trades, which are more shorter term. If you're looking, say, at something that is more of a trend, then you would use quarterly trades, which are based on the future market contract dates, which close usually on the third Friday of December, March, June and September. Now these will stay open until the third Friday of those months, whichever one you're choosing to trade. But the advantage to having them open over that period is say if you were looking at a trend and you wanted to trade over a longer period, you do pay more in terms of the spread, but you're not paying that interest payment like you do in rolling daily trades. So that actually works out in terms of the actual cost of that trade to be much cheaper. So you would use a rolling daily trade, say for a short-term trade, and quarterly trades, the December, March, June, September trades, for much longer, say, trending trades. One of the key things that you can do, or you do automatically with spread betting, is that you control a lot more for less, and the ratio usually is around about 10 to 1, but it does vary from broker to broker and depending on what you're trading, but usually it's 10 to 1. And as a result, this carries a much faster risk of loss due to the gearing. So, for instance, if you have a small move in the actual, say, equity that you're trading, this is magnified by 10 times in the margin that you put forward for the trade. So you can lose quite quickly. Conversely from that, it does carry an equal faster gain of 10 to 1, so that would go in your favor if the market is going in the direction which you said it would. So your profits, if it's the equity, for instance, is going up and you're trading bullish, for each point that is reflected by 10 times in the margin that you put forward. So if we look at how a trade works, and we'll use our example of company XYZ, and we'll try and keep it very simple, but it is very easy to understand. So we have company XYZ, which is trading at £8. Now in your portal, your broker, they will provide a spread of 795 to 805. So this is just an example of a spread on our company. Now 1 penny or cent, excluding Forex in trading terminology, is essentially known as a point. And you decide, using your skills in technical analysis, that the price may increase, say in this example. So we decide to make a trade with the broker. We open a trade at 800, which is where the market is right now, at £10 per point, meaning for every point that above the spread at 805, you will make a profit of £10. So let's say, for example, it reaches 820 and you close the trade. You have made 15 points times £10, which is £150. So congratulations, you were right. Let's look at if you're looking at not bullish trades, but bearish trades where we're going short. So let's assume you think the value of that company XYZ will not go up this time, but in fact will fall and go down below the open at 800, below the open of 800. So your quote again is 795 to 805 from our spread betting broker. You place a short trade expecting it to fall in value, and it goes to 775. Now don't forget, we opened at 800, close at 775. The spread that we were given was 795 on the short side, so 775 minus 795 is 20 points, or £200 profit at £10 a point trade. So it sounds great, but there is a catch, and it's not really much of a catch, providing that you're sensible. You only obviously profit if you're correct. You're only going to get a reward if you're going if you're saying it is going to go in the direction in which you say it's going to go. The broker and spread betting company will take any losses you make from the deposit of cash you have in your account, and that's usually taken from the margin that you've put forward for that trade. And and that's a proportion of your deposit which the broker takes or the spread betting company takes as a security on that trade. And also each trade you make will cost you in the spread in the quote. So every time you trade, you are essentially being charged a kind of hidden fee, and we'll talk more about that in a moment. So when things go wrong, what happens then? Well, let's use an example of, say, we were going long an upward trade on our company XYZ, and we'll use the same figures once again. So say we opened at 800, the spread again was 795 to 805 at £10 per point. Now XYZ shares actually went down in value to 775, but we were expecting them to go up in value. So we had 800, which is the open, minus 775 equals minus £225 loss, and that includes the spread. Now obviously the reverse of that can also happen, say if you were going short and the trade went up, that same thing will happen too. So what is the spread? Well, the spread betting company have to make money. You know, they're not doing it for pleasure. And they make money from the profit between the point that you can profit from either a buy or sell. And this is the intrinsic cost of making a trade. So in our example, we've got company XYZ, which is our fictitious company, and the live price, the market price, is 800. Spread betting company gave us a quote of 795 to 805, and the broker takes a profit of your trade size per point times 5 points either side in this example. So remember, the market opened at 800. If we were going short, the spread was 5 points to 795. If we were going long, it's 5 points to 805, and again that's another 5 points times the amount multiplied by the amount that we're trading per point. One of the good things is, because financial spread betting has become enormous and hugely popular, many spread betting brokers now provide 1 point spreads on the more popular trades that people make, so that's good news. So why not visit us today? Please don't forget to visit. We have many more training videos for you guys to study. Do it at your own pace. We have many articles, and of course we have some of the special offers, latest special offers being provided by the spread betting companies that you can read much more about.